Good morning, everybody. Stan Hussey with AlgoDayTrader.com. Let's get into our European session recap, starting with the S&P 500. Overnight, and really early this morning, right at the London Open, the S&P 500 traded the 45 halves. That's a two-tick front run of the 45 evens, which is the full halfway back long off of our 1423 75 24 low, 1424 low. It's a full halfway back long. This full halfway back long traded, of course, after we broke the full halfway back short. You can see the solid break of this level, and then now the purple highlighted here is the level that broke. There we go. Now it's removed, and we pulled into a full halfway back long. I would not be too surprised to see this level retrade in the NYse session. We do have a gap fill today at a 1450.75. It kind of looks like we're just going to open without a gap, and we do have a technically valid support level from a 1445 half the low overnight lows to the highs of this morning, after basically a halfway back since the European Open. It comes in at a 49 half. If that can hold, we could potentially start a, let's actually look at the micro chart for that. We could potentially start a micro trend higher off of these lows and give us a series of longs to take us to the targets of the larger setup, which now is in at a 1475, which would be new highs for the year, which would fill starting to get into the zone that we're filling our much larger targets. We know we have a 1510 target from a huge weekly and a 1480 from our actually November of 2011 lows. Coming up off that low give us a 1480 target for the following year. The Aussie yen. The area of support we've actually bounced off of really isn't anything. We're kind of in no man's land from a daily perspective, just like on the Aussie US dollar. It's just this prior. All we have here are these prior support levels between 79.40s and 79.60s, which is where we found another bottom. I would be really surprised to see this market rally without trading into its full halfway back long, which is this support zone we've been talking about for some time at the 79s. It doesn't have to, though. It could just break shorts and continue higher. Off of our most recent low, keep in mind we have an unfilled target to the downside of an extension short, and let's look at that on the hourly chart. This extension short is a level we had to reverse engineer. It is a prior low to low extension that traded once the target, twice the target, 3 times the target, and now same anchor new low. Traded a 4th time, 2 new lows, and we have an unfilled target at the 79.21s, which means overnight it looks like we had a traditional hold inside of this short. And now you can see the 2 levels that we are flagging between on an hourly chart. They become, I consider these 2 15-minute levels. We have a traditional short, a glowback short, in other words, from a prior day's high to a day's low. We're holding a 50% short on a second test here. That is in the direction of our extension short, and both targets are right down around the 79 area, which is where our larger full halfway back long is. Off of our most recent low, we have gotten participation twice now, off of a full halfway back long. And against this long, we have broken, or in the direction of this long, we have broken a micro short. So we have a 79.80 to 79.90 support zone, a 80.20 to 80.30 resistance, and we're really just caught inside of a 40 to 50 pip range here until one side breaks. So we're going to be monitoring that closely to see who ends up being the ultimate winner here. The Aussie US dollar, just like its yen counterpart, it is actually in a next in the series extension short. Let's show you what that short is. We entered this short the first time it traded from the 102.50s. It hit its target to the pip and the downside at the 101.50s. Same anchor, new low now has traded twice, just like the Aussie yen. But however, the market is also inside of a full halfway back long off of its low. So the Aussie US dollar finds itself in its own 40 pip range here, and we're going to be monitoring to see which one of these holds. Remember, the downside targets on the Aussie US dollar are right around 101s, which if we step back on the daily time frame is at that full halfway back long. Keep in mind that the Aussie US dollar is in this larger triangle A, B, C, D. I haven't taken the time, but might as well plop this out on our chart so you can just get a good understanding of what we're looking for to play out. E wave is technically valid above a 96. So I'm going to put on this chart the valid. I'll make it it's kind of dark blue. That is a valid. This blue area is the valid area for the E wave to complete itself. So there's a very large area from an LUA perspective, a 500 pip range. But from measured move perspective, we're looking for support in the 101s to 1 even. So this is our big buy zone here. And that's still 200 pips below us, so the whole market could be in trouble still. As you know, risk appetite in the FX market is looking slightly different than potentially risk appetite in the equity market, which that's okay, but we have to keep note of that. The euro US dollar has gotten a reaction now, not once but twice. First time off of its full 50%, it got free. Then they traded to and defended the 6-1-8 line of a full halfway back long here. What is holding, however, resistance is the 6-1-8 line. Well, it actually looks broken, of a Globex short. Outside of that, there really is not much else to speak of on this chart. We haven't traded much of a short today. We're just pulling back into support, which has proven itself first at the 50% line and then next at the 61.8. I ended up getting long the euro from actually right about here, 29.33s, which was after I saw and what I witnessed was a defense of the 6-1-8 line and then a full halfway back long holding. So I front ran that long. We got long micro, and we unfortunately missed getting free by 1 measly pip. So I mean, it is what it is. That's you know, sometimes you don't miss getting stopped by 1 pip. Sometimes you don't get free by 1 pip. But that was a little silly not to, I guess, force fill that. But we are holding a micro halfway back long, defending the 6-1-8 line here off the lows. We are 4 minutes. We're just a couple minutes here. Yeah, 4 minutes from closing this 15-minute candle, so potentially a low here, and the next push-up could actually potentially get us free. So we're going to hang in there on this one, and if it's a stop, it's a stop. On a larger time frame, remember we've talked about this before, there is the potential for the euro to pull into its full halfway back long for the year. Excuse me, that level's at a 126. But like 2010, we're potentially anticipating this full extension to hold at the 28s to its target at the 33s, and then from the 33s the market could roll over. In 2010, let's step out to a daily chart. Just to remind everyone what happened in 2010. There was an extension. You can see this daily extension. It's very similar to the one we're in right now. It went to targets. And after that, the market pulled into a full halfway back long. So basically, the market did 5 waves up and then gave us a full halfway back. Well, let's look at our daily chart now and see if we can discover, well, yeah, this kind of looks like 1, 2, 1, 2, 3, 4, 5, 4, and one more high would complete a 5-wave cycle up. So just like in 2010, we have a daily extension long holding, could hold up to its target, and after targets are filled, before the full halfway back short trades, the market could pull into its full halfway back long, which at that time would be at 127. So that'd be a 600 pip drop. 2010, it did that in a flash, so there's no reason to believe that we couldn't potentially do that again this year. So we're monitoring this. So far, it's been a great fractal, and we'll see what happens here in the near term. Okay. The euro has kind of been on doing its own thing. It's actually potentially, you could say, the euro has tracked the S&P 500 closer than the Aussie, but as they are both in daily extension longs, the euro and the S&P, and the Aussie still actually in valid shorts and trying to pull back into its full halfway back long. So right now our net position is technically a euro Aussie long from like this morning's lows. So let's take a step back. You almost have to look at the euro Aussie on a daily time frame right now. It has traded up into its full short. But it has valid extensions that have traded once, twice the target. And unless the euro Aussie, now there is an off chance that 2580s hold, but in reality a move down to 2450s wouldn't be too terrible here. Okay, so we'll see what happens, but the euro Aussie could very well be in a short right now, coming off of a big short level that it traded straight up into on the daily time frame. Okay, that doesn't mean we can't hold a full halfway back long from here, but it does mean that the euro US dollar is going to potentially be under pressure. All right, so that's it going forward for today, going into the NYse session. It should be, we're having markets that are getting good reactions from participation levels, which is usually a great indicator that there is trending in the market. And we just need to be adaptive and capitalize on that. So have a great day, everybody, and we'll be back with you as price action develops.